Good day, my name is Christel from Frans, Klerk, Independent Technical Analyst. We are going to look at a couple of indices for the long term. In other words, we're going to look at weekly graphs with a 40-week moving average, which will give us a good indication of where sectors and indices are trading at the moment for possible opportunities and threats to make decisions. And the first one I want to have a look at is the J55, and that's the oil and gas producers index. And we can see at the moment that resistance that weighted around 27,372 was tested and remained a resistance. Now, the big test at the moment is sitting at that previous support that was found in the week of the 23rd of March 2020 at 22,996. That level should remain a support on a weekly graph in order for us to think that this might be a possible double bottom. Now, a double bottom formation is when I've got a retracement, the instrument finds support, bounces again, finds resistance, retraces, and finds support at almost the same level it did the previous time, and then bounces again. And when that previous resistance changes into a support, my double bottom formation is confirmed. Now, a double bottom formation is a turnaround pattern. Double bottoms, triple bottoms, inverse head and shoulder formations, and tweezer bottoms are possible turnaround patterns on a graph that tells me the sellers have dried up, the buyers are coming in and expect some upside. But remember, this is a weekly graph, and that level there at the 22,996 on this index must remain a support on a Friday close. We can have a little bit of room for breathing between it, so it doesn't have to be that exact level. Remember, technical analysis is more about a range of a price than a specific price. So 22,996 must remain a support in order for us to see more upside. And if we look back, we can see that there was a massive double top on this index J55 that warned. But the big test was when that 40-week moving average changed into resistance, and that weighted at 60,671. And for some of our viewers that knows kisses very well on technical analysis, will maybe see this as a possible bounce, and it could not change that red line, that 40-week moving average, into a support again, and it just retraced from that, and that was seen as very, very negative. That should have been the second warning for long-term investors to say, the buyers could not keep this index afloat. Maybe I should think about, consider taking profit here. The other big test or warning about was obviously when we saw these lower highs. And that always acts as warning formations to say the sellers are coming in, they are taking profit on the rallies. Consider yourself taking some profit there. So never ignore lower highs on a graph that is this toppish, and especially when that 40-week moving average started to change into resistance, it acted as strong warnings for long-term investors in the oil and gas producing sector. I also want to look at the J135, which is the chemicals index. And if we look at this index, we can see, it is at record lows. And the last time this index appeared at these levels was never, if we go back to August 2006. So the big test on this chemicals index will be when a 4,631 changes into a support. And this index should keep this level a support on a Friday close in order for us to see the next higher low and to believe that the buyers are in it and that they are keen to keep it a support. Now, the next higher low will be confirmed. So the instrument pulled back, this index pulled back, and somewhere it should find support, and that support should be higher than the support there. And when that level changes, that was previously a resistance, changes into a support again, the next higher low will be confirmed, and that will be seen as positive. And let me draw this exact line in there for you, which makes it a little bit easier. And that weights at 4,668 on the chemicals index. Above that level, we will feel a little bit more comfortable, and hopefully the next higher low will be confirmed. When will we assume that the momentum to the bottom can continue? When 2,411 which was that previous support in the week of the 16th of March 2020, changes into a resistance again. So 2,411 is the line in the sand at the bottom, and 4,668 is the strong resistance that needs to change into a support in order to fuel the momentum to the top for the chemicals index. The J151 index represents the coal mines on our JSE. And we can see a clear V formation, massive pullback, strong support in that week of the 16th of March, and a lamp pole formation rally to the top. Now the big test or resistance waited where that next lower high was confirmed at 16,698 on this index. Now the big test is, will this index go back to that level? And at this stage, it looks to me that that blue line is losing steam. It looks like it is not strong enough, pointing upwards to that previous resistance at 16,668. And that level should change into a support to makes us feel a little bit more comfortable about the coal mining index. When this index possibly loses momentum from here and it continues to retrace, and this lower support, which waits at 11,855, changes into a resistance again, we will see the next lower low, and that is seen as negative. So every time you can see this index bounced, the high was a bit lower than the previous high, and that is seen as negative. So if this coal mining index does the same, we can assume that the momentum to the bottom can escalate even further. So that 16,668 is a strong level that needs to change into a support in order for us to feel that the overall trend to the top can continue. And I also want to just highlight this head and shoulder formation. And we've said it time and time again, head and shoulders, double tops, triple top formations are warning formations that should not be ignored. I mean, there was a clear head and shoulder formation on the coal mining index, J151. And any technical investors should have taken note of that and say, there is a probability that we can see more downside on this index. That was the first warning formation on the coal mining index. The second warning was when this 40-week moving average was tested, could not change into a support, in fact, could not sustain it as a support. And when it retraced from it, a negative technical goodbye kiss was confirmed. And again, that is a negative, so it was more goodbye, I'm out of here for the downside, and that is seen as negative. So that 40-week moving average is critical levels that can be used to say, is my sentiment towards this instrument positive, as long as that 40-week moving average remains a support, or is it negative? And when it tests it and retraces, it is seen as very negative. I mean, there's a massive head and shoulder formation that we've just spoken about, but I also see here there was a small head and shoulder formation that also should not have been ignored when that level there at 17,662 on the coal mining index changed into a resistance. Again, warning formations at the top should be taken note of. The J150 represents the gold mining index. And we know with the massive rallies we've had in the gold sector, I mean, look at that test on the 40-week moving average. Again, a positive technical goodbye case where the gold mining index came back, tested 2,512. It kept the 40-week moving average as support and just rallied massively to brand new record highs. And again, if we go back, the same thing happened during the week of the 13th of March 2019. The index retraced, almost came close to the 40-week moving average, kept it as support and rallied to higher levels. So we can see again that the 40-week moving average is a critical support on this index. And that can be then also the next warning when it maybe retraces at some stage. Use this 40-week moving average on the gold mining index, the J150, to say maybe the long-term sentiment is now changing to negative. But at the moment, clear momentum to the top is in place. Brand new record highs. Even if we zoom out, we can see there's this massive double bottom. But also take note, I mean, this double bottom was formed from February 2012 back to May or April 2020, about an 8-year span. So it can take another 8 years should this massive double bottom play out completely to the top. We're always careful about a lamp pole formation that rallied and escalated at such a degree that normally just, falls over because of the base not being strong enough. At this stage, I think you're too late to enter. My first warning will only be when this index changes 3,401 into a resistance again. We can see strong upside still going on the gold index. The J211 is the industrial 25 index. And we can see again, the next higher low was confirmed, strong V formation. And when that level there around 66,130 changed into a support, massive upside. Now the big test will obviously be that 40-week moving average, that red line. And that waits at 69,468. When that level changes into a support, we can assume that the industrials index will escalate to higher levels. But if it cannot change it into a support and keep it as support, it will act as a warning that we can maybe see some upside. And again, a double top formation warned clearly here back in February 2020 with a double top, where the instrument bounced, found resistance. Let me draw that for you. It bounced, found resistance, retraced, found support, bounce, again resistance at almost the same level of the previous time. And when it retraces in that level of support change into resistance, it was a warning formation that haven't been ignored. And again, it was so close to that 40-week moving average, which should have made the decision quite easy to take profit and get out and look for something else. Feel free to send us your requests for next week so that we can have a longer term view of what our indices in South Africa can look like, or should we expect anything more. Take care.